I think right now, what I've been trying to get a grasp on, to get a feel for things, and you guys let me know what you think. We had this squeeze off the lows, right? It's been going according to plan, like the way we wanted this thing to happen. Um, it's panned out that way. In other words, we didn't want that just runaway rip where you miss that initial entry and then you have to chase, and we don't like to chase, so we're going to be sitting and watching and have nothing to ever participate in. There's been some nice back and fill, and we needed that. We needed that because, as we spoke about the last couple of webinars, there have been a lot of eyeballs on this end of year seasonality bear market rally, right? Just up until a couple days ago, you have even more people on any update coming along for the ride. I'll give you an example, right? And you guys know the whole stigma behind this, especially now more than ever. I saw a big thing plastered all over Twitter, because they're on top of, they're killing this guy. But now Jim Cramer calling for the end of the year rally, where he kind of was really gun shy, for obvious reasons when it came to equities. He's touting that end of the year rally. So you had, again, we spoke about this, the bulls and bears looking for a bear market rally based off seasonality, positioning, and everything else. So it was obvious. And the only way that it can play out that way, right, more than not, right, usually the only way it can play out when you have that many eyeballs on it is if you get these gut checks and these shakeouts along the way, right? And then you get some of these touts flip-flopping, right? Like Mike Wilson has been the bear calling this whole correction, right? People even forgot he was extremely early calling for this bear market. But now he's king tout when it comes to predicting what the market may do. Even he, who's still bearish and think there's a lot more unraveling as far as the fundamentals are concerned, was, touting this bear market rally based off, again, positioning, seasonality, and everything else, right? So you even had the bears flipping sides for a short-term trade. And, from my experience, it's going to make that trip, again, even if it happens, that trip a rough trip. It's not going to be an easy ride. And that's what we're seeing. We're seeing where you get an update, everybody gets bullish. You hear about that soft landing and end of year rally, and then boom, market sells off for a couple of days, and everybody's flipping, gives up on the rally and flipping to the other side of becoming an extreme bear again. And I don't think that's going away. I think, especially over the short term, I think we're going to see more of that, just because of how many eyeballs are on it. That's simple. All right. So what I've been trying to figure out here, and I think now with the information that we got, I think it's pretty clear that the majority of the squeeze, right? So let me try to put this in simple English so everybody can follow along here. Down here, okay, you had everybody off sides, right? You had headlines about something breaking in the global economy. Financial conditions were tighter than ever. Some spreads overseas were blowing out. You had everything here that told us that if this would continue lower, you would have some sort of capitulation event. Something would break, and it would lead to some sort of capitulation event, okay? And throughout this bear market, every time we got to that point, magically, the Fed would take the foot off the brake, and you get some relief to buy them more time, okay? So that's where we were at this point, and everybody was positioned for something to break, right? Nobody wants to step in, get long, when all that's in front of us, all that information's in front of us. You had a couple of attempts of people calling for a bear market rally, and they got chewed up, right? We talked about that. So it wasn't making it easy, and they gave up on it. Then you get this, right? And into this, we've been seeing all the professional side, and that's who's been the most bearish out there. It's been the pros, okay? The market savvy players out there, funds, who keep abreast of current events and everything happening in the world, the Fed and the whole 9 yards. They've been most bearish throughout this downtrend and extremely bearish here, right? So I'm talking hedge funds, CTAs, systematic funds, vol targeting funds, that whole crowd. Into the squeeze, and that's the catalyst and the power behind this squeeze. They've been covering shorts, okay? The process was well underway. We were, I think we've been talking about that anyway. We met a couple of times. And we're seeing it in the data that we look at, right? So let me give you guys a look here so you know what I'm talking about as well. Right? So here is, as a whole, hedge fund exposure to equities, right? You could see down here, right? They're leaning into shorts, into the lows, and then bink, right? You get them covering with the rest of the professional crowd and helping propel prices higher, all right? And they've done it, a few times in the past here too, okay? So the point I'm getting at is we're seeing it in the information that we get daily, that process of short covering has been underway. Okay, what I've been trying to get a read on now, what I was mentioning at the start, is there anything left as far as short covering is concerned? And from what I'm seeing, in itself, on its own, there's not much left. There's not much gas behind a short covering move. Okay, what would need to happen is you would need this professional crowd to start adding risk exposure. Okay, not just covering shorts, but you would need some outfits starting to add some exposure, okay, to get everybody else to tag along. Okay, you rarely get that in bear markets, right? You get that maybe once in a whole bear market, which can last for years, okay? And that ends up becoming a huge bear market rally when it happens. And the ingredients are out there for such a process to take place, okay? And the reason why I say that, not to jump around, but in the backdrop here, okay? And think about, like, psychologically how this plays out. Down here with everybody short, right? With the whole professional crowd short. Think about what was going on, okay? Fed pivot was flushed down the toilet bowl. Hard landing was the main topic being spoken. The Fed over tightening, everybody was concerned, shitting their pants over it, right? You had every negative thing that could possibly be put into the mix was there, all into the lows here, okay? And magically, as we get this short covering rally, okay, what ends up happening during the course of it is a lot of that negativity gets washed out as well. And you get some green shoots, right? People start to talk about some of the more positive things that are happening, all right? Now, what do you hear? You hear those two words, soft landing, right? And you hear more and more of it. Each and every day that the market rallies, you hear more people on CNBC, Bloomberg, anywhere talking about the Fed has a shot now at a soft landing, right? Where they gave them zero odds of it just a couple of weeks ago, okay? Another thing that's been going on in the backdrop is the economy as a whole, okay, where everybody, including myself, is expecting the wheels to come off at some point and really start to see deterioration, okay, in the fundamentals of the economy. We're not seeing that, okay? It's been extremely resilient, right? And not that that's extremely shocking in any way. I mean, the Fed pumped a lot of juice into this economy, into the, coming out off those COVID lows. There's a lot of lingering effects. you know, somebody was talking about today, like a lot of even the construction work out there and stuff like that, their backlog, jobs that they already had planned for the rest of this year and early 2023, those don't go away necessarily unless shit hits the fan. So there's still positive things happening out there, right? That stuff hasn't dried up. It's really the housing market that's been affected the most, and that's usually the case anyway, right? So again, bottom line is you're getting an economy that's holding up a lot longer than some people could have imagined, okay? And you see it in what's being priced into the market as far as rate cuts are concerned, okay? If you rewind a couple months back, the market was pricing in rate cuts as early as the beginning of 2023, a couple months away, right? Now, you guys who are members know we looked at it on a couple of Sunday webinars. I was looking for the screenshot again to show the rest of you. Now, you got rate cuts being priced in at the end of the summer of 2023, okay? So in simple English, what that tells us, the rate cuts being priced in, that's the market telling us when shit's going to hit the fan, okay? Because if the Fed, if they're pricing in rate cuts, right, they're telling us that the market is, it's going to look like, the economy is going to look like Armageddon at that time. That's how you get rate cuts, okay? The Fed's not cutting rates unless things look abysmal out there, a hell of a lot worse than what they look like now, okay? So the market, which is a lot smarter than all of us, right? And even the market gets it wrong, but they're predicting at least by the summer of 2023, that's when things are really going to start to look ugly, okay? And the market front runs that, so figure, let's say spring. Now we have a time here, we're in November, until spring of next year, where the economy really starts to roll over, and we're kind of in no man's land, okay? You have inflation, again, just off the CPI, PPI, one batch of numbers, whatever, softening, okay? So that's out there. You have an economy holding up for now, and now you have the market telling us that things really aren't going to get ugly till at least spring or summer of next year, okay? Forget whether that plays out or not. That's irrelevant to the conversation we're having now. What I'm trying to paint to you guys, the picture is what players and funds, institutions may be looking at now and how they may position accordingly. They may see a window here, right, from now into the first quarter of next year of some economic stability. Maybe the economy slows down but doesn't deteriorate, right? Possibly inflation softening, right? Based off the information we have now. Again, we're not forecasting what's going to happen 6-9 months from now. Nobody has an effing clue, so forget that, okay? I'm talking about the information we have in front of us. All right, so you got an economy holding up better, you have inflation softening, right? You got the worry of nothing breaking, right? Everybody was worried about something breaking. I mean, look at credits of default swaps. Look what they've been doing. Right? This is not worried about a damn thing right now. Right? They're not pricing in any recession right now. Okay, so the point I'm trying to get at is there's a window now of where you may be in to make a little bit of money, right? Grab some long exposure and get out in time, right? I'm talking about the appearance of this trade from now into the first quarter of next year, okay? Because everybody expected, including myself, that the first quarter was going to be abysmal. And that's what prevented a lot of people from, a lot of professional money from getting long, right? You don't get FOMO when you fear everything's going to blow up in a couple of months. Okay, so now that got postponed in a sense. All right, so here's where we're at, bottom line. The short covering aspect of the rally has run its course. That's pretty much done. Now, the only way we can see further upside, okay, is if players actually put some money to work on the long side, and you have the ingredients for that to possibly happen. All right, so that's where we're at right now. And I think the best takeaway for us, okay, because you still have a Fed that doesn't want any sort of strong rally, right? We see already what they're doing, right? The market is bounced, and look what they're doing, right? You got Bullard talking about, I don't know, 8% rates or whatever the hell he's talking about today, okay? So I still don't think, I think, to put it this way, I think the odds that you see a move above 4,200 is very low, okay? So I think you got to put that aside as trying to, come up with a game plan for that. What I think the better way to look at things, is because of this little sweet spot we may be in of some breathing room, that any weakness, you're probably going to see money, you're probably going to see a bid in the market looking for certain opportunities, especially, again, here I'm saying it again, without any real physical proof of it yet, and I keep saying it's coming, but I really think in names even more so than the indexes. Why? Because, like I said, the Fed, the probability of the market going beyond 4,200 on the S&P 500 is very low. So if you have that, right, if you believe that, why would you look to get aggressive in any way on the long side as far as at the index level? You would look towards individual names and try to find some alpha there. And I think that's where we're at. I think we have a market that is kind of going to frustrate both sides, because the bulls can't get what they want because of the Fed, and the bears can't get what they want because inflation may be softening and the economy's holding up, right? And we're kind of in the middle of that. And while the indexes do whatever they need to do and trade in some sort of range, possibly, I think individual names, on a case-by-case basis, you're going to see some decent action there. You're going to see some decent action there. The one thing we want to make sure we do is you still want to be really smart about it, because you're not going to have the wind at your back, like you're in a bull market. Okay, so you want to try to take advantage of these gut checks when the market sells off, like we're experiencing right now. Okay, you had this excitement, right? Oh, let me get this one, right? You had this rip, everybody gets excited about a soft landing, and then you get a little breather here. And that's where you want to start looking for opportunities in individual names. Right? Makes sense? So that's where I think we're at. Now, things are going to change. And what I mean by that is you may see the market come in more than it has right now, right? We may see tomorrow down, Monday down. And then I think, if that's the case, then I think it opens up the opportunity for a play on the indexes again. For a bounce. Okay, but off of up moves, I think you got to be really selective and try to look for those selective opportunities in individual names. Now, I'm hoping the sweeper activity cooperates. I don't see why they wouldn't. I don't think we're going to, in other words, I think it's not a guarantee we're going to see that new name action that we're all starving for. Okay, but I think we're going to see, whether it's speculative action or action in strikes that are 2-3 months out, we're going to see more aggressive activity of institutions trading instead of making bets on names, right? And that's what I'm looking for. Like, there hasn't been a lot of it yet, okay? But me personally, like, what I'm looking for, I'll give you an example of something recent, right? Okay. Insurance name. Insurance have been one of the best spots in this market, okay? This name doesn't catch much flow, period. let alone anything aggressive on the speculative side, right? And when was it? Not yesterday. Was it yesterday? No, the day before yesterday. I think it was right here. Okay. We had multiple sweeps in weeklies. Okay. So there was aggressive activity coming into weeklies in Progressive, an insurance company, right? With no earnings or anything like that. Okay. And what it likely was is, somebody on the professional side that took advantage of this dip and was looking for, a snapback rally for a trade, right? So that's really, that's weeklies, that's really short term. But, an example, if this was December activity or January calls, right? It would fit the same bill. So I'm trying, and this is more, I wouldn't even say a preference, but what I'm trying to really stay away from in any fashion, okay, is looking to make a play off a weekly sweep in Tesla when it catches 6,000 sweeps a day, 3,500 on the call side, 2,500 on the put side. You know what I mean? Because there's no information in that. There's no edge in that. There's an intraday scalp of some buying or buying of calls or puts, possibly in a name like that. Okay, I'm looking more for names like this, right? Where it sticks out in a sense that, okay, somebody is speculating here, rolling the dice, but it's true speculation. You know what I mean? Why are they buying weeklies in Progressive? With no known catalyst. So that's where I'm kind of at. And goes with the plan that I think, regardless of where the indexes may be at, right? Like where they're, like, for example, where we are here now, right? We're just coming off a rip, and now we're kind of breathing over here a little bit. And I think that's a good thing. I think we could chop around here even if we're heading a little bit higher, which is possible. Okay. While the indexes do that, you can find alpha in individual names, and they'll have nothing to do with the market. You don't need, like, for example, the overall market was down net, and a name like Progressive was up, right? And listen, I got news for you. If you play both sides and you're comfortable playing both sides and you have found success playing both sides, you can find, alpha on both sides, calls and puts. Okay. Where again, you're probably saying, well, puts, it hasn't been the case on the put side either, because a lot of names have already been beaten up. And, we've seen puts across the board for ages. Now, if you see an aggressive put sweep, again, example. There were a couple names just the other day. They destroyed on the put side, and then news came out. What was it? Look at the symbols. This one, right? Was it this one? DLO? Yep, this one. Okay. Where you got, Uzi type action, puts coming in, and then all of a sudden the hit piece, right? Muddy Waters it was, good call already, right? Comes out with a short report on it, right? That's what they were playing. Good, that was the other one. And then this one, I didn't even know they're at some analyst day or investor conference. All of a sudden we see multiple put sweeps come into a name like ZI. What's the reason behind there? There was no earnings, there was no nothing. And then we find out they warned on guidance and across the board at some conference. Yeah, they warned. So, and look at this, like, these end up, if you catch them right, and you get the right action, these things end up, you had ZI and the other one DLO on the put side. You didn't need anything else for the next 3 months, without even slicing up, because they're major hits. So the only way you're going to be able to catch these things, okay, in any way, is if you have your eyes open for them. And that's the moral of the story I've been preaching to you guys the last couple of weeks. You got to try to get your head away from staring at the indexes and even the larger names continuously. You know, you have to. You have to. You're not going to be able to find a trade every day in the indexes and the big names. And I think that's going to continue to get worse as this bear market moves on. You know, even if these lows hold for quite a while, there's a strong possibility that, you know, the old leaders lag. And like I've been saying, the alpha is elsewhere, right? Yeah, you've had hot money in the China names. There have been pockets all over the place. You know, there have been pockets all over the place. Again, we may not like where the momentum and the action is showing up, but it's going to move around. There are going to be other things that we'll be able to take advantage of, and it's not just going to be stuff. Yeah, right. You started to see names diverge from what the overall market and the leaders are doing. Yes, exactly. And we're at that point. Again, we spoke about this the last couple of weeks. We're at that point, I think, in this bear market where what you're going to see is after the market squeezes and a lot of the negative sentiment gets washed out, okay, and we're due for a retrace, okay, the market's going to retrace. Most of the names are going to go lower. Some are going to hold up better than others, okay? And then what you're going to see is you're going to start to see the money find spots, okay? And things are going to stop going lower even as the indexes go lower, right? And start outperforming. And that's what we're at that point likely in this bear market where we're likely to see that type of action until the wheels fall off the economy. If the wheels fall off the economy, all right, I still think they will based on what the Fed has done, but they're not right now. You know, they're not. And in every bear market, it's a given. We have to stay on our toes and stay abreast of all the stuff we look at, right? What I mean is the flows, right? We want to know where CTAs and hedge funds are positioned, okay? Because that ultimately, that's the current of the wind behind our backs or against us, right? We want to know if credit spreads are widening out, telling us that there may be contagion, okay? Because there's still risk out there. Even though right now may be a little quiet time, you know, risk can come out of anywhere. That's a bear market. And we were just talking about, you know, one that, which I think is a major risk. A lot of people think it's not in this crypto crap. Okay. If we start to see some of the signals we look at when things are unraveling, start to show signs of unraveling, we have to pay attention, you know? And I think the crypto market here's the rest of it. I don't think it's systemic in a sense, right? It's not big enough. But what I think can happen is, like you guys were saying, the money came from somewhere. There was a lot of money dumped into this shit, right? We know how hedge funds and all these cowboy money managers, how they chase equities when they're underexposed, okay? If they need to show returns, I'm sure there was a lot of that shit going on in the crypto markets, right? Where you can see crazy returns with less money. I'm sure we're going to see some of these funds blow up, okay? And if you see enough of them, what's going to happen is they're going to need to raise liquidity. That doesn't mean they just sell their crypto, which you guys said are bidless, right? What they need to sell is the more liquid stuff. And that's likely going to be big tech, equities, and everything else. Okay. It hasn't got to that point yet. It may not. I don't know. Okay. That's what I think a lot of eyeballs, a lot of people are looking at right now. Right. But if we see signs of that, you know, we have to acknowledge it. Okay. We can't just stick on a game plan that we talked about on a Thursday night webinar and put the blindfolds on. You can't do that in the bear market. Yeah, and exactly, Dan, that's another risk, without a doubt, right? I think it's two-sided risk to the war. You could have, right? We just got a sign of it the other day. A missile went awry and landed in Poland. It happened to be in, a non-event because Ukraine tried to shoot it down, whatever that end up was. But initially, the market sold because if it was a Russian missile that landed cleanly over there, there's a big problem, right? So I know I'm stating the obvious, but I think it's a big problem in this game. A lot of people, they get in bull markets, less is better, right? You don't want to look at too much. You don't want to overload the information because it costs you money in a bull market. You know what I mean? You want to stick with an edge that works. You don't want to get too cute, and you want to ride the wave of a bull market. You want to be aggressive. In bear markets, you can't play the game the same way. You have to be cautious. You have to be observant. And you have to protect your capital. That's cardinal rule number one. So you have to stay abreast of everything going on and not worry about, oh, I just put that long on, I got to get out of it. Who cares? Who cares? And then, that's the problem, especially for position trading in a bear market. You can't just put on a position, sit in it, and wait for it to work out. There's too many intangibles. There's a lot of wild cards, a lot of balls in the air. And we see it every day, every week. It feels like there's a binary event that nobody knows the outcome, right? Just based off the Fed. So, but big picture wise, with nothing coming out of the blue, right? No, like you guys are stating, no nuke, no crypto contagion spreading and shit like that. I think we have a decent quiet period here for individual names. I think the market still could be difficult, but I think individual names, we can definitely find opportunities, definitely. And I think we can rely less on the market. That's the most important thing. Because prior to that, we had to rely on the market solely. If the market didn't go higher, we couldn't make money. Now I think it's a lot different, the way things are right now, a lot different. This is the other thing. I'm going to check the CTA shit here. This was out of JP Morgan. So this is just showing how the hedge funds did cover some shorts, right? They're still not aggressively long, but last week they aggressively covered shorts. And we've seen it in the price action. You know what I mean? We've seen it in the price action. This rip. We see it in the price action. Yeah, I'm honestly, and we all probably want it, but I wish just Bitcoin would go bang, not Bitcoin, the crypto. Let Bitcoin hang around for all I give a shit. But I would love this crypto to just go boom and get on. You know what I mean? Get on with it. Just wipe it out already. Cut, stop the misery for these people, for crying out loud. Let me see if I got any CTA updates here. Nah, nothing yet. But yeah, Goldman was mentioning the CTA flows. You're probably going to need upside in the indexes. Remember we were talking off the last webinar. I know members. I'm not talking to you guys, but for anybody who's not a member, we were talking about how the CTA flows were lopsided to the buy side, which would create a bid in the market. They kind of have dried out here a bit. They've dried out here a bit. You still have buybacks, so that's a plus. They've been lighting it up. Concerning to you that Goldman raised the Fed run, not really. I think everybody, honestly, John, I think everybody's guessing. Nobody has a clue. I don't think anybody knows how this plays out. Anybody, the timing of it. Because like I said, I mean, the majority of us, including myself, thought we thought come the end of this year that I thought at least that we'd start to see the unraveling of the economy in a sense, and we start to talk less about inflation, more stagflation or deflation. But you know, again, it's been a lot more resilient than a lot of people thought. So you're going to see, you know, you're going to see changes along the way, but nobody knows. Nobody knows what the hell. Yeah, I think, again, I think we need to see the talk really start to heat up regarding deflation before this ends. You know what I mean? So the sooner we get there, the better. But you know, I think that's the, you know, that's the last few chapters of this bear market. You know what I mean? I think it's the last few chapters of this bear market. Even earnings, like, you know, earnings have come down, but they haven't got hit like a lot of people thought. You know, not in the least way. And the reason why is because a lot of the issues in the economy stem from inflation. You know, when we start to see the effects of what the Fed has done, this aggressive hiking cycle and tightening cycle, that's when you really start to see earnings unravel and everything else. You know, even the fund flow, right? We continuously talk about it. I mean, there's still money coming into funds on a week-to-week basis. You know, why? People still have jobs. Still, people are still buying fucking tokens, for Christ's sake. Yeah, Kathy Wood buys every day. You understand? It's like, it almost feels like not much has changed besides the Fed greasing the wheels, you know, to the upside. The CEO sold into the highs, every single one of them. You know, and you think about it, right? That's how bullish the environment was, that you see like the Microsoft CEO sell a chunk of stock. Like, how much did he sell? Oh my God, right? All the big guys sell into the highs, and you know, the market continued going higher for a little bit. Nobody cared. You know, it was talked about for a day or two. Nobody cared. Yeah, November, exactly. And then, you know, they look like a genius now. All the big guys, all the big guys, all the big guys. You know, even Musk, right? Wasn't he selling Tesla? I think it was all of them. All of them. Yeah. So, you know, we're at where we're at. But again, like I told you, we don't, a lot of people, you're gonna see a lot of people around you get frustrated. That's what you're gonna see. You're gonna see a lot of boredom and frustration, and people give up on this game. Okay, especially if we're, you know, we're kind of caught in the middle here, right? Because, you know, either people want things to unravel and we see that capitulation, or we want the bottom. You don't want in between, right? That's the last thing people want, is that in between. And right now, I think there is a higher probability of that in between than the other two scenarios. You know? And that's kind of, you get that that post-2000 type market conditions, you know, that we've been talking about, where, you know, time goes by. You know, time goes by, and it ends up looking like this. Again, the chart never does it justice, right? The chart always makes it look like an easier process. But, you know, it's the lower highs, and just years go by. Years go by. And, you know, what we want to avoid, like this to here, right? That's where we've been at up to now, in my opinion, where it's really hard to find any opportunities on the long side, right? It's maybe the most defensive names. This go around, it was like commodity names. But you really, you know, there's derated, everything's getting derated, right? And then what starts to happen after that, you get where you start to see pockets and individual names diverge, right? And then when the market does this into lows, you're going to see a lot of things go lower. Okay, it's not like things are going to buck the trend, go higher, but what you're going to see is things go down less and hold up better and rip to a new 52-week high when these rallies come, right? And then you go for another, like a little lull here, right? Where outperformance in individual names, the markets don't do a thing, and then everything goes down, and even the stronger names off a rally will go down. You understand? That's where, yeah, I mean, there's not enough out there, right now anyway, unless something happens to show up in the future. There's just not enough out there right now to even talk about, forget a bottom, the start of a new bull market. Like I've been telling you guys, is it the bottom is the wrong question to ask. It can only get you in trouble. Forget about, is it the bottom? Because even if you think you have the answer to that question, you still won't be able to make money off it. Right? Because what I'm telling you, there may be a low, like we've seen, but not everything is going to participate to the upside. And then as the market stabilizes, you're going to see things make new lows. Right? So is this the bottom? Does nothing outside of a trade. You get this trade and then nothing. Right? And if you think this is the bottom, this trip down to test the bottom is going to still be extremely painful, even if you think it's the bottom. So risk reward wise, it's useless anyway. We need to see more boxes get checked off for the start of a new bull market. That's what we're looking for. The start of a new bull market. And we just don't have it there. We don't have it in the flow. We don't have it in capitulation. We don't have it in just your run-of-the-mill sentiment out there. Is it a bottom like we spoke about, right? I sound like a broken record, but you're not going to hear that question. Is this the bottom? You're not going to hear it. You're not going to hear it. Bottom in the market. That's the most popular question and has been throughout this whole bear cycle. Is this the bottom? Is this the bottom? Is this the bottom? Is this the bottom? All right, we spoke about that last time. I got deja vu. That's the most popular question out there. The only time when we need to talk about that and discuss that is when we see everything else that we need to see. And at that point, it doesn't even matter. Even if we want to discuss it, it doesn't even matter, because what's going to be happening is we're going to see action and new names, new leaders. You understand? And even you're going to be thinking, well, even if the market bottomed or not, who cares? I'm playing these names and they're going higher. You know what I mean? So you're not even going to care if the market bottoms or not. And that's when the market bottoms. Yeah, you can't. You can't. You gotta give up. Now, don't get me wrong. You're gonna have people not care about bottoms because they're gonna give up on the whole game in its entirety. They're just gonna give up. Right? You think the market's never gonna bottom, and that's why they give up. I'm not saying that. What I'm saying is, I think it's a distraction focusing on that. I think it's a distraction. From what I'm aware, the solar sector, the strength behind it is from that new bill, isn't it? Wasn't there a new bill that yeah. So that's what I think. I mean, have they still look good? I know this thing caught nothing huge for it, but caught a bet again today. Was it this? Not ENTG. What the hell is that symbol? ENPH. All right, this is one of the better ones. Look at this. That caught another bull bet today. So yeah, flow wise, we're not seeing new leadership by no means, but we're seeing some flow here and there, and some groups and some sectors looking a little better. You know, you're starting to see like the QSRs of the world start to outperform. All right, look at that. Wendy's should start outperforming. I mean, it still has upside, this thing. You know, we talked about like BTU that continues to catch flow, but it's really slim pickings. It's really slim pickings. Crocs, that was a hot mover back in the day, right? Oh, it's coming back now. Look at that. Yeah, some of these retail names, right? What was this one? This one's recession proof. PJX, I think it is. Yeah, look at this. Look at that. Right? So you see now how there's things that look different. There are things that look different. But you don't, the thing is to STNG, that's unbelievable. I can't get over that stock. I mean, this thing couldn't get out of its own way when it first started catching action. Now this thing, every little dip back to new highs. Yeah, a lot of flow in it, a lot of flow. What was I saying now? Oh, the one thing we need to be careful about, and seriously, is chasing. Because, like, for example, you see like some of these things, they got hot. You got to be careful when you see things like this, right? Because if the economy does get hit, right, and you are caught, chasing a move like this, you're going to get this. So you want to look the early stages of this. Otherwise, spit on it and look for something else. But there've been crazy moves, crazy moves in pockets out there. Industrials, right? Jesus Christ. I mean, that's a big move for cat. And that's the rationale behind it, right? The rationale behind some of these industrials is exactly that. If you have this little bit of lull where inflation's coming in, but the fundamentals of the economy are still hanging in there, that's a little sweet spot for these things. You're going to have a quarter or two of earnings holding up, being a lot better than anticipated. And you get these squeezes. And what about all the cash on the sidelines? You know how much cash is on the sidelines? You've literally had the pro side of this market taking down their exposure this whole entire trip. They didn't just start unloading long exposure. Crazy amount of cash. So, they're itching like we are. And that's why I think, barring anything breaking out there, you're going to see some of that money, a little bit of that money being put to work in certain spots. So that's where I think the opportunities are going to stem from. And now we're done with earnings season. So that's another good thing. The old leaders just don't get, and I'm preaching to the choir with you guys, but that's going to be to a fault a lot of players out there who've never been through a bear market. They're going to stick to names that are down, 80% and think they need to bounce, and you got dead hockey sticks all over the place. The healthier, even the bear market rallies, the healthier bear market rallies, you're going to see different names show up in the flow and outperform price action wise. Let me see, did I get this update yet? Nope, not yet. What else was there? Yeah, and you got Sharpies that are still they've trimmed a little bit of exposure, but they're still long. So the likelihood is a lot of this shit gets washed out before things can get ugly again. Yeah, I'm still playing intraday. And honestly, I told you guys, I wasn't even remotely interested. It wasn't even a thought holding anything at all overnight. But now if there's something that I see that I feel I can get a little more of a move by holding it an extra day or two or something like that, that's how it's going to start for me. But until we see, I need to see flow. You know what I mean? The flow's got to get me excited. Otherwise, I'm just going to stick to what I'm doing. Yeah, the flow is just, it's not healthy looking at all. And it's protecting me this whole bear market. Why would I deviate? Really sloppy. But we've had some excuses. We've had earnings season. This week you have November expiration. It's a huge expiration, contract wise. So you have a lot. You had the Fed meetings, exactly. CPIs, the whole 9 yards. We have a window here where it should clean up, and if we should be playing names, the flow should cooperate. Yeah, they don't shut their mouth, but that's part of their toolkit, part of their game. This is Sharpies. So you had this crazy ramp up of long exposure here, right? Basically getting into these lows. And then since the market peaked out here, they didn't unravel it. It's not like they came back here's the zero line. They just, they've been trimming a little bit. And you look at the market, it's right where, they initially got long. That's why they don't, they're not as active as we are, they're not, they got different game plan. They're not going to try to trade this type of shit. If they think, a level should hold, they're going to stay long if the refresh short. So, QT, you have supposedly a little quiet time on the QT as well, right? That's what we were talking about before this rally got started, where you had QT ramp up. Now you have it slow down a bit into year end. And there are rumors that QT may be done. QT may be done. Right? You got the dollar relaxing. A lot of the things that were a problem have started to, get into place a bit. But again, guys, even with those things being positive, the problem is that with the mission the Fed currently has, they cannot allow a rip here. They cannot allow a bullish phase here to get investors excited. You understand? Think about their mandate right now. What they're trying to do is the opposite of what they've been doing for years. They're trying to spook people out of risk and speculative assets into more conservative assets. Okay? They did the opposite. Each and every correction we've been a part of, in bear market we've been a part of, they smoked everybody out of their holes of conservative investments to take risk. And the only place to do it was real estate and equities. You couldn't get a return anywhere else. Now it's the complete opposite. Now you can get a return everywhere else, and it's not really worth the risk of being in the equity market. You know what I mean? So that's what they want to do to slow demand. That's the only thing they can do. And you heard what Powell said. They said, are you worried that you may overshoot? You may over tighten? He said, listen, we're not trying to over tighten, right? We want to avoid that, obviously. But worst case scenario, we rather over tighten than under tighten. Because if we under tighten, we don't have many tools to combat runaway inflation. All we can do is what we're doing and run our mouths every day, like you guys are saying, right? That's all they can do. Okay. What they know works is they can throw in the kitchen sink in QE if they do over tighten and get that fixed. Yeah. So that's regardless of whether you agree with that philosophy or not, that's the way they look at things. That's the way they look at things. So the last thing they're going to do right now, even if they do something different behind the scenes, okay, the last thing they're going to do right now is say, we did our job, inflation's dead, and we're going to loosen up. They will never, ever admit that. Think about what will happen if they did that. Can you imagine what would happen if the market got that impression? Forget it. It'd be out of control. You literally, that's how you get hyperinflation. People would lose their minds with all that cash on the sideline. Right? What's more likely to happen, okay, is they soften things just enough to where the regular guy out there poops his bloomers, right? What they're looking at, what the regular guy is looking at, keeps deteriorating, and underneath the hood, you start to see smart money putting money to work behind the scenes, right? And that's our cue that we're closer to the end of this than not. But that's how it works. That's why they had to pull the rug. Even with all this, you can't have people making millions upon millions in crypto and shit like that. You can have billionaires walking all over the place. You know what I mean? You already got, it's ridiculous, these 22-year-olds coming on CNBC giving people financial advice. They've never been through a legitimate correction. They're coming on CNBC giving advice to people. You can't. Can you imagine we're in a world like that? Where you give power to people like that, kids like that? Right, wearing t-shirts, not combing their hair. Like this guy from FTX. He looks like he crawled out of a fucking sewer, this guy. What the fuck? Jesus Christ. Awful. It's almost like a spit in the face. Oh, money, I make money so easy, I don't even need to wash my hair. So they can't, and then that's why, you know what I mean? They know that they're never going to cash their chips. They know we all have that greed. We're wired that way. We want to make more and get more and more power and more power. So they know they got them whenever they want, right? As soon as they flip the switch, they bury them all. It's like a reset, right? That's what it is. It's a reset. Yeah, exactly. It's craziness. So that, that's why, the world just can't work any other way. They got to do that. So that's why the way everybody's looking towards this market right now, it's not going to play out that way. Everybody's waiting. You hear it on CNBC Bloomberg. Well, I'm not really going to start taking risks till I know the Fed is done. Like, come on. You think it's going to be that easy? Where everybody knows the Fed is done and then everybody just starts taking risks and speculates again? Party on? Never plays out that way. Ever. Never. Never. It buries everybody. Where they don't even know when the turn's coming. So that's the thing. To stay tuned when everybody's not paying attention because it's so scary, and see the turn. Debt ceiling. Yeah. 2011 was that debt ceiling. Yeah, I think the debt ceiling is coming up, as a matter of fact. But 2011 was that debt ceiling nonsense. You think about it, like that was a scary moment there. The market really took a shit. And now you laugh at it, right? But now it's tough, all because, like you guys are saying, because a lot of these people made money so easily. It's not that easy to scare them, Even like, look at this FTX. Usually you forget something like that happens, you scar people for the rest of their lives. It spooks some folks, but not as much. Not as much. That post 2000, some of you were trading with me post 2000. You think about everything that happened. You had the post, the internet bubble blow up. You had Enron. You had blue chip behemoths, WorldCom, the CEO going to jail, all that shit go on. Then on top of that, you had planes go into the World Trade Center, 9/11. You know what I mean? You think about how much went into creating a bottom post 2000. Yeah, it was nuts. We haven't seen anything here yet, guys, if you think about it, right? What do we see? CNBC hasn't even run markets in turmoil yet. Okay, it's going to be on guaranteed every night for weeks, if not months. Even as the market bottomed and rallied, it will still be on as the market rallies in its face. That's how bearish and negative people are going to be, shitting their pants. Yeah, now they're talking about ideas all day long. They're talking about ideas. No, that's why the bottom is we can't even think about it. You can't even think about it right now. And it doesn't have to be as drawn out as we fear. It can happen. It can unravel quick. Sentiment can get wiped out pretty quick. But it's not here. It feels too good for, if it wasn't, and here's the thing too, I believe it, you guys may know, my personal opinion, if you didn't have the professional side take down their risk as aggressively as they have, okay, this market would be a lot lower in my opinion. But I think based off positioning, you got, basically all the pros threw in the towel. If it wasn't for that, we'd be a lot lower. I'll be a lot scarier. I think that's what's holding price action up. Like, look here. By the way, I forgot I wanted to even. When did it come out? Tuesday. All right. This is the stuff that I think is drawing. Almost like a tug of war here. Hold on. Where's the no. Here it is. So you have this is Harnett fund manager survey, right? So these are pros, right? Fund managers. And they're all beared up. Like they got big, huge cash levels, huge, right? Because again, these are the more market savvy players out there. All right, so they're talking about a lot of what we're talking about. They're not looking to buy tokens. They've been through this and they know what's going on. They got nothing to sell. They de-risked already. So I think that's holding things together. I really, truly believe that. And I think it has a shot of continuing to hold things together, in the meantime, until we see the economy deteriorate, something break or something. But who's we gonna sell off FTX going bankrupt? I mean, they're gonna start shorting aggressively. They have nothing to sell. What'd you say, Eric? I missed your thing. What chart do you want me to pull up? Zoom out and put on a monthly SPX? Oh, I have it up here. Monthly, you said? All right, let's see. What are you talking about here? So you're talking about here? Log. I got it on. Zoom out like this? Well, wait, how am I gonna? I gotta go like that. Oh, click auto? What am I doing? Okay. All right, what are we looking at here? This, look at this. This is SPX monthly, right? You see these little, yeah, time, right? You look back, look at the chart, right? This bugs me out when I look at this. Look at this. Right? It makes the dips look minuscule. Where's this is 2008. Yeah, it's crazy. Look at this chart. That's why you got to stay in the game no matter how bad it gets, right? Right there it tells you all. Yep, exactly, Eric. Exactly. Exactly. Yeah, guys, 100%. You're 100% right. That's why I keep saying don't hang up the cleats. Don't get to that point. Don't beat yourself up, cost yourself money by rolling the dice, taking shots, unnecessary shots in the heart of a bear market. It's not worth it. It's not worth it. Yes, Eric's 100% right. Big picture, the game is rigged in our favor. 100% right. Yeah, just chill out. And it's funny because this is how me and my boys look at it. Right now, okay, here's how to treat it. Okay. And not a lot of people like to talk about the game in this way because, I'm a trader, I'm not a gambler, I'm in bed. You have to right now, you have to look at this game almost like, and that like we see the flow, a DraftKings account. Seriously, I'm bullshit, all bullshit aside. Okay. You like something, you're placing a bet on the Giants. You lose your bet. You're not going to be, it's not going to knock you out, but it's simply, you're just placing a bet. You're betting. Okay. And you're looking to hit more than you lose over the course of this bear market. And then when the wind gets back at your back again, that's when you open up and play the game the right way. But that's the way to look at it right now. Manage your money appropriately, right? Be smart. You're going to put 5 grand, 10 grand into this. Make sure you don't put 50 grand into this just to try to get even. Manage your bankroll appropriately. If you come out break even, you're better than 90% of the people out there. But I got news for you. You're probably going to, if you do things right, you're probably going to make a little bit of money. Nothing to get all excited about. But you're probably going to come out profitable and be ready for the next bull market whenever it comes. If you do things right. Right? If you don't take the needle and get the urge to roll the dice in a big way because you're bored or whatever the hell reason. You look to survive the bear market. You're more than likely, you got good odds that you'll make a little bit of money if you manage your bankroll appropriately. And then you'll have bullets to fire when the time comes. Take the needle. That's what we say, Oh, I took the needle last night. I bet the whole card and lost my lungs. Yeah, we got to remind ourselves. And listen, AJ, it's not that difficult right now. I'm being honest with you. It's not that difficult right now to remind ourselves. It's going to get more difficult. It's going to get really difficult to remind ourselves about this same conversation when things get ugly out there, and that's the time to remember what we're talking about. And listen, some people don't have the luxury of hanging around long enough, even if you go and you have to come back, whatever, just say, the game's rigged in your favor. You make sure you come back. Yeah, and Praveen, I'm worried. That's where we're at. I think we're going to start to see a lot of people just lose interest. A lot of people just lose interest. That's what I think. Like it looks like that type of setup. It looks like that type of setup, but again, could be wrong. Who knows? What do you mean, Eric? Oh, are you talking to me or are you talking to somebody else? Oh, death by 1,000 cuts. Yes, yes. Yep. Yeah, I know. I know. Yeah, this is torture. And Eric, again, that's what bear corrections usually happen like that. When you get these bear markets, that's what makes them so nasty. And when people quit, they don't come back for a long, long time. It scars you. You know what I mean? It tortures you. It absolutely tortures you. You try to wait it out. The time aspect too, it just tortures you. Yeah. We all have demons. You just, you gotta listen, you can get away, as you guys know, you can get away with these demons in bull markets. A lot of your flaws, they don't hurt you in bull markets, but they'll kill you in bear markets. They'll absolutely kill you in bear markets. So you gotta listen, no matter what, okay, you're going, as a player in this game, you're going to go through something like this at some point, no matter what. So you might as well go through it now and have a plan and learn from it. Because if you're gonna expect to hang around in this game, you're gonna go through shit like this, and you gotta have a playbook for it. You gotta have a playbook for it. These were the bull bets from today. Just nothing, right? We talked about this STNG. Yeah, this is nothing new, right? That's interesting action. QSR, nothing too crazy. That's an interesting name to watch on dips. Baxter, that's kind of a medical defensive name, called a bet. This name I looked at, these were leaps. Let's see if it catches any other action. This is a Victoria's Secret leaps. But $70. What are these guys? Drunk? I hate to see that. This is a name that's been seen in action. You guys know this name? AMKR? Anybody familiar with this name? I remember this name. I don't know if it's the same one from back in the day. It was like storage back then. Yeah, is this the same one that from years ago? I don't know. It might be a different. It looks like the same one. Semiconductor. Yeah, this is it. Wow. Look at this whip. What is that about? Crazy. Yeah. So we've been seeing flow and not garbage either. Like, they're betting on the name. Like, look at this. This is not, just a trade. They're buying leaps. 2024. Yep. And that's the thing, Lourdes. We're going to see, like, and you look, right? This is what you're going to see a lot of these names. Like, I remember post 2000. This is what you're going to see. The difference between what we were seeing in the bull market and now. You're going to see earnings and growth rate. That's what you're going to see. That's what you're going to see. CLFD. I know that one from somewhere. I think that caught action not too long ago. See, Clearfield, that thing. Let's see. Yeah. This was a beast. Look at this stock. Jeez. Yeah. Oh, they have earnings coming up. Oh, they reported tonight. How'd they do? Okay. Up over 100, 107. Oh, they did buy this name, right? That's right. I knew it from somewhere. I think I remember asking you guys in the room about it. Yeah. Clearfield. Yeah, some retail. You had earnings there, right? Macy's. Somebody mentioned. Maybe they're getting their act together. They look good. We'll see. Now that earnings are done, we're going to start to see, we're going to see more names. I'm telling you, we're going to see more names. You know, and that's what the other thing we're going to notice is, like, you're going to see the 52-week high, not all-time high, 52-week high list. You're going to see more names on there. We're going to be in a bear market. You're going to see more 52-week highs. Just, you know, from names and pockets outperforming. Yeah, like, see, like this stuff, and that's the problem. There are going to be bounces, you know, that you try to, that's going to try to lure you in. But this is the hard way to try to make money. These are, you know, you want to, again, maybe just extreme short-term trades. You like the spot, you know what I mean? Catches some aggressive activity maybe, and you like the spot for a quick trade. But the easy money, and there's no easy money, but the easier money is going to be elsewhere, not in these things. Yes, exactly. You're the names that are doing well, if you're paying attention, they're going to stand out, right? Like you see now, like a name like AMKR, if that caught flow in the bull market, I probably didn't even know about it. You know, there was so much action everywhere. You know, everything was exploding. Like, you know what I mean? It's almost like you even lose your edge towards the end of a bull market because everything's participating. You know, now you start to see like the real life behind the flow. You see what they're really buying. So we just got to keep our eyes open. You know, like I said, listen, there's nothing wrong with trading the indexes or even the bigger names, but you can't get wrapped up in them, you know? See, for me, it's easy. Like I don't have an interest in them. You know what I mean? I don't have an interest in them. And I told you guys, one, I know from my experience, when you come out of bear markets, that's where all new leaders sprout up. You know what I mean? That's where all the big money's made, from the new potential leaders that come out of bear markets. You know, all the names people are talking about today, all were no-name new leaders coming out of the prior bear market. You know, so to those of you who like to invest, right? If that's your game, same shit. I would look elsewhere. You know, I would look elsewhere. And like one of you just mentioned, you can start to see that these names stick out. They're doing something right. They're profitable. They're growing profits 50% year over year. In bad times, it's just it's incredible. You know, you're going to look back and the biggest regret you're going to have is, oh shit, I own that name at so and so. Look at it now. You know how the game works. You know, we're all going to be complaining. We're going to be complaining that we owned the stock a couple of years ago, $50 lower than where it was. But for those of you who like to hold on to things, you know, I tell you a great strategy if you could stick to it. I attempted it, and I'm too much of a degenerate. A buddy of mine attempted it. He lasted a lot longer than I did, but stop. What we were doing is any of those new growth names, when they were catching action, when we built a position in them, when we sold them to make money, we left. You know what I mean? We would leave a piece behind. You know what I mean? Whether it was equity or leaps, a little piece of the profits, we'd still own some of that name. Yeah. And, you know, when you do that towards the end of a bull market, it's not worth it because you're going to get buried. But when you do that coming out of the bear market, whew, it adds up, my friends. Yeah, it adds up. It adds up. But that's the key. The key is when you get a bear market, that's when you got to have that idea to do it. You know, you always have that idea when you're not in the bear market, you're in a bull market, but you can get buried. But as we come out of this, you know, and you just forget about it. You know what I mean? You try don't trade it. The profit paid for it. and just leave it alone. Because you're gonna screw it up if you trade it. You leave it alone. A couple of years go by, you get lucky, you can, you touch the next NVIDIA, anything like that. So separate accounts, a great idea. Great idea. So there's a lot of good guys that come out of this mess eventually. You know what I mean? A lot of good. Yeah, I have to do that. For anything I'm holding, I put even in my daughter's account ones, far away. If I could get my hands on it, I'll start pressing buttons. You know what I mean? Yes, exactly. You're like a little mutual fund, Mike. Like you're your own mutual fund. It's exactly that. Exactly that. Yeah, that you can't open still, exactly. You gotta put a lock on it. Yep, it's true. Oh, so what are futures doing here? Nothing? Flat? So what are we pin? Yeah, I'm waiting to see if Goldman had nobody came out with anything yet. Let me see. I know that the last Goldman update, this morning, or was it last night, talked about how they think they think it's dried up now. Yeah, exactly. We need Bova's come out the weekend. Here's McElliott's. Oh no, I'm not CTA. What am I doing? Oh, here it is. This is this morning. Here. This is this morning. 16.4 billion. There was a lot of CTA buying, tons. See, we currently have modeled over the next 5 trading sessions should decline meaningfully. Where the market closed below that. Who? Who's that, Brady? What house? Is that a house? Who are you talking about there? Oh, you're talking to Eric. My bad. I thought you were talking to me, Brady. My bad. So CTAs are done. Hedge funds, they're pretty much done covering too. Hedge funds are pretty much done covering too. So, but who cares? We're talking about markets here, the indexes. I don't want the indexes going higher anyway. Yeah, still, is that unbelievable? Let me ask you a question. So when is the option market going to blow up the equity market? Because how's that not going to happen? Please tell me how that doesn't happen. Can you explain how? I know. Huge expiration tomorrow. 2 trillion. Jesus Christ, that money just. Options. I can't get over the money in options. Got so big. Yeah, that's Panda. It scares me. I know McElliott is pooping his bloomers too over it. Become a full-fledged casino, Yeah, one little flash crash, right? One little fat finger. One little fat finger will do the trick. One little fat finger will do the trick. Yep. From London, right? He was from London. That's right. That's funny shit. Kind of a no man's land here, market wide. So, what names you like? Anything good? Anything you're playing recently? So, yeah, BTU still looks good. BTU still looks good. Europe, that's another thing. Like Europe needs to chill out a little bit, right? Need a breather here. Look at that whip. Damn. Shit. Which one? BTU, Eric? Oh, you're talking Nordstrom. I remember I made a nice hit on this stock, off some flow. I don't know how long ago it was when they were looking to take it private. You remember that? That's a while ago here now. That was before COVID. Where was that? Jesus. Jeez. Well, 1/10 of TJ Maxx and Ross. This thing had earnings, right, today? Yeah, it doesn't look too bad. You got these recession-proof retail names, right? This is the king. Still, remember we were talking about this, Still? The recession proof names? Yeah, TJX. New highs. Look at this. Man. Where did I think this was one of my last, believe it or not, positions of 2021. Where the hell was that? Oh, that was over. No. Wait a second here. 2021. Oh, yeah, so it's over here. Yeah, the summer, right? Oh, so it's over here. Yep, you're right. Good memory. New highs. What was the other name you guys talking about? Burrow. How's that doing? That's another one. Oh, this one, they got headaches? This thing was a beast too. Dollar Tree. Let's see. Dollar Tree. That looks good. Financial and bonds. Well, Goldman, US financials. Goldman's been ripping. Yeah, I know, Eric. Recession trade, right? There was some move in Goldman recently here. Yep. Like the banks should do well. The only thing that kills them is if you get credit spreads blowing out. That's all. If you get just your run-of-the-mill recession, you know what I mean, with no credit issue, I should say. No credit issue, the financials probably see some money come in. Shop is a hockey stick. Yeah, I know. Caught a little bit of flow too. I mean, it was short term. Oh, one of the best were longer term, but it's been catching some flow. Brady, Shop. Sure is a hockey stick. See, I would just that's the allure, right? You look at new highs and you look at where it is. I mean, I would just trade it. I wouldn't, you know what I mean? I wouldn't fall in love with it. I would try to trade these things, and that's the extent of it. but there's definitely been some interest in it option wise. Bank trade to mid-January. Oh, that's your Santa rally bank trade? Harnett likes the banks. Let's see, Harnett come out yet? We'll look at Harnett together. Let me see. It's 8:30. Jesus, we're in the flow show late tonight here. Let's see. Later, Brady. Have a good night, Brady. No, Harnett's not out yet. Let's see the weekly fund flow, what it looks like. More buying. Yep. Unbelievable. You know, you talk about it and you hear how much money was put out there, you know, with the Fed and fiscal and sending checks out. And it doesn't sink in until it starts to come out how much money was out there. But they're still coming into fund flows, I'll tell you that. No outflows, I know. Look at this. This is this week. They're coming in for Santa. Santa. I don't know. I don't. Told you this chart, the other chart scares me, the fund flow chart. You know, I just, because you just can't envision. Oh, you know, I think I do. You can't envision the start of a bull market with fund flows like this. You can't. I don't see how. Where is it? Right here. This is US. This is fucking crazy. Come on, that's psychotic. Look at Europe. Nibble 3,600. Yeah. So he's talking about nibbling on like the names you're talking about. Banks, you know, not the old leaders, new leaders, small caps, banks, industrials. You start nibbling at 3,600. What the Siri? Get out of my life. What are you doing to me? That's what Harnett is talking about. Yeah, that's a good point. Yeah, Sharpies are long. Sharpies have been long, yep. Yes. Yep. Lourdes, enjoy the rest of the night, Lourdes. Later, Dan. This is look at 2021 here. This is calendar flows, right? So it tells you by the year. Look at the orange. This is 2021. Which one's that? So from what, who wrote it? VIX trade stat from McElliott? Which one? Eric, I say that's what I say to myself all the time. You sell SPX FX30. Oh, yeah. Yep. That's what every time everybody thinks something's gonna break, right? You buy spoos. And then you sell it once the VIX unwinds, right? That's been money. has been money. Yeah, that's another thing, right, Eric? With like the fund flows and all the other shit, And I get it, like you said, it's more death by 1,000 cuts type bear market, right? Rather than that explosion in VIX that you get off a COVID crash or anything like that. But I agree with you. I feel a lot better when the VIX is elevated because this is, it sneaks up on you when like it's just been in this range here. Look at this. Like this, we were talking about it back here, and now you can stretch out this green box another 3 months. Damn. It's funny, and we see it all day long, right? You hear me, you you hear me talk about it during the day in the steam room, right? They sell VIX futures even when the market's not even pushing higher. They just sell VIX. They just sell VIX. There's conspiracy theories, say he'll behind it, that it's the central banks doing it, the Fed. You've heard that, I'm sure, right? They just suppress VIX and it keeps from the market imploding. Right? I mean, listen, I wouldn't, yeah, 50 cents Powell. I wouldn't pay, like, you can't disregard anything these days. But think about it. You don't want the market to implode while you tighten liquidity and do what you need to do, right? Suppress VIX. Like, and people talk about, like, look, you're not going to get a VIX explosion with VVIX laying on the concrete floor dead. Like, this thing's dead. You know what I mean? Like, it's dead, like not even working dead. This is usually one of the early signs that something's cooking, right? You start to see VVIX heat up. Like, look at this. This is dead. Right? If I blindfolded you and told you we're in a bear market, would you think VVIX was on new lows? Yeah, that's what I mean. You need more before you can even start to talk about new bull market. You know what I mean? You just can't. It might go lower. I mean, who's to say? Honestly, I can't believe it's at where it's at right now. This is vol of vol, right? But like, this is an early sign. Like, if you see VIX, moving to the upside, you see this thing rolling over, VIX is coming down, Yeah, you would think. Yeah, watch it go to zero, right? Like that other VIX product, remember? TVIX, yeah. These VIX things. Isn't one of the other ones broken? VXX, is that broken? One of them's broken, right? This one, isn't it? They're all broken, these things. They're all broken. Yeah, you know what they do though? Every time it gets down, they reverse split it, That's what they do with all these things. And there's another one, Eric, what Phil just said. Here's another one. Here's another sentiment indicator. Look at this. Can you imagine? What is this? What's this? What is this? Like, basically, that's no sellers, no buyers. What is this? What the hell? What's holding this thing up over here? Inverse hockey stick, exactly. I don't, come on, this doesn't make any sense to me. I don't know what this is. I don't know what's going on here. All it, yeah, I mean, but shorts don't want to touch it. They're scared of it. Like, come on, this thing honestly should be $5 tops. With some of the other growth names and hyped up names, yeah, it split. I know it split, which is even worse, right? It was $100. Yeah, AMC could have beaten, right? Oh, a bigger beating. Like I remember before even GameStop before the apes, I would trade to a flow sometimes because it was a nice mover off flow. Before the apes got a hold of it. But you know, it was a piece of garbage. This thing everybody was waiting for it to go under. You know, they were extinct. Who buys games at the store now? Who knows NFTs? I don't know what shit they're doing now. AMC got caught a beating because, oh, it's a proper business now. Yeah, this is like a shell of something. I know. That's what I'm saying. So, you know, this is all hype job. Yeah, Mark, you know, that's that's the point I was trying to make is that, you know, I I don't realize how much, right? The excess money out there. I don't realize how much is out there and still out there. And yeah, cult is right. If the inflation data flips, yeah, I mean, what do you mean? What happens what? To equities? Oh, deflation. I thought you meant the other way. Yeah, honestly, Eric, that's what I think happens. You know, a lot of people think inflation will come down hard, but then stabilize, and then you get that stagflation type of thing, which is the worst of it. But I think inflation, you know, it's going to roll over. I think, you know, you look at like M2, all those things, it's screaming that it's going to roll over. Yeah, exactly. Especially, right? I mean, the Fed did what it needed to do. I mean, so it wouldn't shock me. I think I'm telling you, I thought it was going to show up earlier. I thought start of 2023 we'd be talking already about deflation. So this has been, you know, lasting a lot longer than I thought. I really thought that deflation would start to be heating up as a topic now. See, Eric, I think that once deflation comes into the mix, that's where I think you start seeing capitulation. I think you're not seeing capitulation now because, like we just spoke about, what everybody has a job. Everybody still has money, like Mark is saying, from all the excesses. Everybody's still okay. They're banging out their credit cards. You know what I mean? Nobody's hurting out there. Like when deflation comes into the mix, right? Even like corporate America, I think earnings aren't that bad because inflation has been the problem. When you get deflation into the mix, I think that's when things start to get ugly. That's what I think anyway. You know what I mean? Yeah, but Eric, do you remember post 2000? It was the same exact thing. Do you remember post 2000? Same thing. And then there was capitulation at the end of it. But the move up, oh, the rally up prior is what you're saying? the rally up prior to the downturn? 98, no, 98 was shorter. 98 wasn't even a bear market. 98 was more like a correction, no? Yeah. 98, I wish it was 98. 98 was great, you know? This reminds me of post 2000, guys. I'm not going to lie to you. You know, it doesn't remind me of 2008 at all. This is post 2000. I mean, and you guys know, I've been saying that for a while. A lot of similarities. I think if you add the Bitcoin, the crypto mix into the pot, I think it's identical to 2000. Identical. You know, I just think it's a mixture between equities and crypto. In 2000, I was wishing hard the recession is done by the time I graduated engineering school. 2004. 2000, I told you, I just got into business. 98 was like my first legitimate correction, but 98 was awesome because 98, everybody was quitting, or it was a harsh correction. And I had nothing to lose in 98. Then you had the big rip into 2000. And then 2000, that's when everyone got destroyed. You know, you could have waited out 98. Let's see, where's 98 on this chart here? Look. Okay. Watch the difference. Here's 98 on the chart. You can't even see it if you zoom out. Here's 98. Okay. Here, look, 3 months. Boom, boom, boom. Double bottom. Good night. You kidding me? Look at that. Yeah, exactly. That's exactly, John. So this was a textbook correction. You know, 3 months, 4 months, and gone. But it was vicious. Like the leaders, top internet tech names were down 50% off the highs. Easy. And then they went to new highs. So it wasn't even a shift of leadership. The old leaders led again. But you see how quick this was and vicious? Now look at 2000. Here's 2000, the top. Okay. Look at this. Here's the top of 2000. Okay. You see how 98 just rolled over? Look at this now. Double top, right? And the big tech names were still going higher. Biotech was going parabolic. How about I told you guys, biotech had the craziest rally, in my opinion, even crazier than the internet stocks in a matter of a month. $2 stocks going to 75 in 4 days. Okay? That happened when the market already peaked. Look, so think about this, right? You talk about a tease. All right, you got people calling top, you come down, double top, come down a little bit again, test it again, and still don't break to new highs. And then you start to roll, right? But look, still not that bad, right? Here's support, right? Now you're getting into late 2000 here, late 2000. Okay, look where we're at now, big picture wise. Look, okay, that kind of looks like the beginning of this sell-off. Okay, now watch. You see some bear market rallies, bear, just like we're seeing now. Okay, then whoosh. This here was the first real whoosh. This was 9/11, right? Or no, not yet. 9/11 is coming up. Wait. Here's 9/11. Whoosh. All right. So you got this move to new lows. Another rally here. People thinking this is the bottom. But just like now, look. Right? The lower highs still there. And think about this bear market rally. People are thinking that's the bottom. And then this was before 9/11, and that's 9/11 market closed down. didn't open for a few days. Then you get another bear market rally off the 9/11 panic, right? Another strong rally. Once again, back to the highs of the downtrend. Okay, and still 9/11, the panic was still not the bottom. Okay, still you had more pain. Look at all this pain from September 9/11, these lows. Now you're in the summer of 2002, and you break new lows again. And this was the final capitulation. That's when everybody, that's it. Nobody had an interest in the market anymore by that point. You understand? Once you had this 9/11 rally, and then think about it, look at this sideways consolidation. Like, this is what I think we may see, right? This. So you're talking about from November, like we are now, all the way into late spring, guys. We went nowhere. Nowhere. Think about all that time. Okay? How frustrated people are playing both sides. Okay? And then this came, and that's when everybody, that's it. They're gone. Done. They want nothing to do with anything anymore. By that point, you had all the internet stocks at zero. It was a debacle. Everything wiped out. But, like I told you guys, if you were looking at the same tech names in the NASDAQ, underneath the hood, small caps, all in an uptrend, new leaders already starting to merge. And then this was it. This was the retest, if I remember correctly. Yep. Oh, you had another retest. Oh my God, Eric, look at this. Look at this, right? Panic low, retest, rally again, retest again. So from July, almost a year, Eric. Think about that torture. Oh my God. Torture. Yep. And then 2003, guys, that was my best year of my career. 2003, the best year of my career. Everybody I knew in the business, when I got into the business, all kidding aside, everybody gone at that point. Everybody was gone. In 2003, I was ready for that. Like, I'll never be ready for anything in this market for this 2003 rip. Because the names that led this rip were already in motion, already outperforming, you know? And then this rip was ridiculous, ridiculous, ridiculous. And that's when, you know, a lot of other things participated, obviously, the market bottom. So if you survived somehow and lasted till here, it was well worth it, you know? But look what do you see what I just showed you guys? And think again, charts never do it justice. As you know, you got to live through it, the price action, day to day, firing up the screen every morning, live through that. Torture. Oh, people watching their tech names rebound. Oh, okay, maybe this is the bottom. Oh no, and just end up at zero. Oh my God. I told you, so, you know, everybody I knew when I got into the game in 97, all bullshit aside, gone by the time this bottomed. Gone. Okay. And we talk about now the question, oh, have we bottomed? Have we bottomed? Have we bottomed? You don't think you know how many times that question surfaced during this downturn? They bought every dip prior to that. Just like now, every dip, if you sold your internet names, you were an idiot. An idiot, because they rallied and split 5-for-1 to new highs. And then they held the whole entire bag all the way down. Wiped out. And then look what followed, guys. Look at this. You know what I mean? Look at this, though. Look. Okay? It's hard not to get paid in a serious way if you're around for this. You know what I mean? Yeah, I'm just, yeah, it doesn't feel anywhere close to that now. You know what I mean? Like, we haven't been through anything yet in reality. You know, like, I think, honestly, where I think we're at, and, you know, so you can't look at prior cycles for it to mirror image. You know what I mean? They don't play out the same way. But the point I was trying to make, what I think we're at is that sideways phase of nothing where a lot of frustration builds. Where was that I was showing you guys? Oh, this was here, right? Here. Like, this is, I think this is coming, even if it's not here yet, this is coming. And I think this is where a lot of the frustration is going to build when we get into this. The moves bigger down, you're saying then, Eric? Oh, yeah. That's, see, I don't know. Is that a fact, like, Eric? You know for sure? Like, the percentages, growth stocks are down more than they were back then at this point? Oh, yeah, I don't know. You know what I mean? I there's no way to know that unless I had, like, the data, but I told you guys, this whole bear cycle, right? And you guys know, I've been saying it for a while, it feels eerily similar to that bear market, you know? Doesn't feel like a correction. We've made that point months ago, you know? It doesn't feel like nowhere near 2008, nowhere near that 2008 cycle. It feels very similar to post 2000. Yeah, and you know, that's the thing. Like, you know, every point in history is different. You know, it can't be the same. It's different. It's always different. But I'm just saying it's playing out similar to post 2000 than any of the prior corrections or bear markets I've been. Forget correction. Correction, this would have been over and done with already. You know what I mean? It would have been over and done with already. Corrections are great. You step aside a correction. You know, you can be patient through a correction. It's not that difficult. The bear markets, you know, those are the tough ones. Corrections, you move to the side and boom, 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 boom. You know what I mean? Wipes out everybody. People panic. You get fund flow selling. You get capitulation, everything into the lows within 3 months. Usually the Fed steps in, cuts rates, and it's over with. You know, this is different. Yeah, and you're right. This needed to come. You know what I mean? We were beyond correction. We've had, like you guys said, COVID and all that. People were getting too big. You know what I mean? You can't have it. You can't have a 3-month correction and rally to new highs, a new bull phase. You'd have people, you see that, like that guy from FTX, you'd have 50 more people like that. Yeah, borrowing 0 interest rates, you know, they'd be crawling out of the sewer and becoming multimillionaires. Yep. So this is a cleansing. You know what I mean? This is a cycle. This is not a correction. This is a cycle. You know, that's why, you know, it feels like there's a lot more work to do unless something hits it and fast forward, you know. But and if you think of this sentiment out there, the rationale of people, like if you had a low, I don't think enough damage is being done out there, you know. People would be ready to pounce if you had a capitulation low right now. And like I said, over and over and over again, when you get the low in a bear market, nobody wants to even know about it. You understand? You saw that 2000 cycle. When it finally bottomed in 2002, after all those head fakes and all that pain, there was nobody I knew who was in the game was around to see the bottom. They couldn't give a shit. They were doing something else for a living. They wanted nothing to do with the equity market. So, but I'll leave you on an optimistic note, and then I'm going to bed. Like I told you and explained to you, what before those 2002 lows came, and the reason why back then I was so ready for the 2003 move is because there was action. There was already action. There was already names outperforming. There was already new leaders being built. There was all that was in play and in motion already. It's just the majority of players in the market had no idea because they were getting buried in NASDAQ tech names and wondering when they hit a low. You know what I mean? But all that was in the works. So that's a little piece of optimism. So I don't send you to bed suicidal. You know what I mean? I'll leave you on a good note. You're gonna see that 2000. You can see that 2000 to 2003 chart in your sleep tonight. You're gonna have nightmares. Guys, get some rest. Big expiration mañana. Yeah, he won the MVP. Now he'll go sign for $1 billion somewhere else, that rat bastard. Right? All right, guys. Enjoy the rest of the night. I'll talk to the majority of mañana. The rest of you have a good rest of the week and weekend. Be good, everybody.